On Friday, Ben Bernanke suggested the Fed will provide monetary easing support if needed. Today I'm joined by Signe Roed-Frederiksen, Senior Analyst at Danske Bank, to attain her views on what was discussed. Thank you for joining me today. So first of all, do you think another round of quantitative easing will be introduced if next week's labour data is weak?
I think that they will probably do it even if it's not that weak, because if you look at the minutes from the July-August meeting and what they stated in those minutes, it was more or less baked into the cake, so to speak, that they are going to extend the rate guidance and move the guidance of the first rate hike somewhat into 2015. And if you look at the comments that Bernanke did in his Jackson Hole speak Friday, although we have had a bit better data over the recent months, he did say that there was grave concern over the labor market and that the economy was having great challenges. So I would say that even if we get more than 150,000 on payrolls growth on Friday, I think that they will do this extension of the rate guidance anyway. The big question is, of course, whether they will also do quantitative easing, and I think that's a close call. And there you might have, if you have a labor market, a jobs market report which showed that job growth accelerated to 200,000 in August, then that might be sort of the trigger that extends this, or that would say, okay, then we will probably just wait and do no QE3 at the September meeting, but wait and see if the labor market has actually turned. But if we look at the recent indicators we got from August on labor market conditions, they would suggest that the payrolls growth will be around 120,000 in August, and that is definitely not enough to bring down the unemployment rate, and not enough to say that the labor market is now healing. So it's a close call, but we would say that the odds are probably skewed in favor of additional quantitative easing on the September meeting.
What else did Ben Bernanke say on Friday, and what are traders looking out for?
What Bernanke did was he spent a lot of time talking about what the Fed has already done with QE and the other programs that they have initiated. And he defended those and said, they did actually have a positive impact on the economy, and they did have a positive impact on bringing down yields on 10-year treasuries and so on, and generally interest rates in the economy. And of course, it does also suggest that going forward, it will be they will use unconventional easing measures also in the future if they deem it to be necessary. So of course, that's interesting to know for traders that it's not that that there will be no more QE programs. Bernanke actually think that although there are costs related to doing such measures, the costs are manageable, and the positive effects of doing QE is actually outweighing the negative factors. So of course the door is still very much open for additional easing and also quantitative easing.
And what is the political situation like concerning the Fed?
There's been some discussion about that the Republicans, or at least some in the Republican Party, does not really favor the QE programs. But I think currently it's not really a big concern at the Fed. I think they are more focused on the economy and what they can do to get job growth again. But of course, if we will get after the elections in November, if we'll get a new president and also a Congress dominated by Republicans, it will probably be bit more difficult to be the Fed, since there's been some key Republican Party members who've been pretty open to sort of discuss that maybe you should restrict what the Fed is allowed to do in the future and so on.
And finally, how are the markets performing today as a result of what was addressed at Jackson Hole?
If you look at interest rates, both in the short end in the US and in the long end in the US, they came down after the comments from Bernanke, around 10 basis points on the 10-year treasury yield and 4 to 5 basis points on the shorter end of the curve. So today's the markets are closed in the U.S., so it's more what they did Friday. If you look at the equity markets, they were actually a bit mixed. U.S. S&P 500 was basically flat over the weekend, but maybe it has something to do with the pace that sort of the increases there have been in the U.S. equity markets. I think that they have already priced in quite a lot of these dovish comments from the Fed. So I think the major effect was seen in the yields markets or in the rates markets instead.
Thank you very much for sharing your views on Jackson Hole. Now, do stay tuned to Dukascopy TV, as this week we have plenty of interesting events occurring and the TV team will be delivering you the latest news. Goodbye.